Hi, this is Randy Finney with the right side of the chart, and this is a closing market wrap for Wednesday, September 7th, 2022. I'll keep this one brief. We'll just focus on the big movers, the primary things that I'm trading right now, where I think the most profit potential is and has been. And that is the equity markets, crude oil, natural gas. Also, like in that lumber setup I gave you today, the wheat trade just popped and then went right back down below the breakout level. Never stuck. So let me just cover the equity markets, crude and natural gas, because those are, as I've been saying, whether my whole thesis proves correct or not, that's what I'm trading and going off of. And so far today, we had the biggest rally in quite a while today. And in my opinion, that is far from coincidental that we also had the biggest drop in crude and natural gas in some time, or one of the biggest drops. So, all right, these are the wedges, same things I got out to you this morning, 60-minute wedges, and that's what you want to see on a breakout. Yeah, and we had a breakout of a smaller wedge last week. Impulsive, closed, and then we consolidated, had one more leg up, and then the seller stepped in hard. But again, all that it didn't negate or take out the positive divergences. It just made them bigger. What doesn't kill you makes you stronger, right? So there's the wedge that we had there. We had stronger divergences at this low, and so far a more impulsive, much stronger rally. There you had one solid 60-minute candle with a close, followed by a period of consolidation. This one, when you zoom in nice and tight, the buyers just kept coming. There's your closing candle, first target, right at the first resistance level, 12,141.25, green candles. And then, as I said, I got a post out to you, and I meant what I said. If you're not an active trader, a day trader, ignore little minor squiggles. But we came up to and slightly overshot that target there. I gave you a 12,223.62. You can round that off to 12,224. Slight momentum fueled overshoot, and what I mean by that, by the way, I didn't clarify that in that post. I know some of you have followed me for a while. I make up a lot of terms in trading. Momentum fueled overshoot is one of those I have. When you have a security, stock, an index, anything commodity, and it's moving very fast with a lot of velocity or momentum, it tends to carry up and above the resistance level or the target that it will likely have a reaction on. I always use that analogy of a catcher, fastball being thrown into a catcher's glove, 90 plus mile an hour fastball. That glove's going to snap back when the ball hits it, because that momentum, that force of that ball is going to carry it forward, but then it'll snap again forward. And so that's what I think will happen here. And I'll zoom down to those shorter term charts and show you. And then we'll look at the other wedges in RTY, SPY, ES, and all those. So we can jump on down to as short as we want. This is a 5-minute time frame. No, I'm sorry, 10-minute. One of my favorite shorter term time frames. This is the same exact wedge. I just made the line blue so you could see it there. And so this is a zoomed in version. There's the divergent low right there on the 10-minute chart. There's today's breakout. Breakout really a back test on the 10-minute. Solid move up, but you can see here we have quite a bit of resistance there on this 10-minute chart, 12,317, and then this was comparable, an overshoot of that resistance level, now support 12,242.50, we'll call it, and we're right back to that now. You can see we're back testing that from above, and I also have, I'm going to step it down. Let me just step it down in here in a second. Let me just show you the trend line. So here's a trend line. You get a trend line like this, you're going to come and visit it, even if the uptrend stays intact. Now, if you break the trend line, then you're going to go probably most likely to the next support level down there. So when I jump all the way down to a 5-minute chart, this is what it looks like there. There's the uptrend line right there. Today. That's all post breakout. We broke out here earlier, been zigzagging higher. 5-minute chart also had positive AK bullish divergence there. So this is where you can get a jump. I always say this, use multiple time frames. The shorter you go down, in other words, if you step down from a daily chart to a 60 or 120-minute chart, or from that 60-minute chart down to a 10, a 15, 30-minute, or shorter 5-minute, you're going to get faster signals, but you're going to have more whipsaws. But that'll get you into the trades, out of your shorts and into your longs quicker. by trading that. It's just like I said, if you wait to on a 60-minute chart, if you take the initial pop of a bullish falling wedge breakout, there's a good chance it'll stick, but there's also a decent chance, especially when volatility is high, that it'll be a whipsaw. So what I like to do is layer in. The downside to waiting for a solid 60-minute close or even a daily close above a trend line is that in a fast-moving market like today, let's just say you waited today, the market was up, the Nasdaq was up 2%, and so you missed the bulk of the initial run, and it's really not objective right now to have, like I said, if anything, you fade this rally. We ran into resistance right there, and we're going to pull back, and that's what we saw, a little profit taken at the close. So those are your levels to watch. And again, you can, if you're not an active trader, don't worry about the 5-minute chart. Keep your eye on the ball, focus on the daily and hourly charts. And right now, that breakout looks good. So whether we pull back and whether it's just a very minor pullback before the next leg up, or it's a little bit deeper pullback to any one of these support levels, I still think we're going up to this trend line. Now, if it's a repeat of the other day where all of a sudden tomorrow the sellers just step in hard and tank it down, well, you still have those lows. Remember, let's not forget that for the last couple of days we've been flirting with. I just jumped over to ES, the S&P 500 futures. I will get to SPY for you ETF traders in 1 second. But remember, this was and remains a very significant uptrend line off the lows so far, the bear market lows back in mid-June, and it's a well-defined trend line. You've got a lot of reactions on there, a lot of reactions, and you had a ever so slightly dip down through there, and if nothing else, that break of that trend line is bullish. I'm sorry. Why is it bullish, not bearish? Well, face value, if you break down, that's bearish, and a lot of people see that and they pile in and they short, and guess what? They realize they were wrong. Those shorts, those that shorted the break of that trend line, that weren't paying attention to the fact we were very oversold. I don't like to short something when you get extremely oversold, especially on the shorter term intraday time frames. And they missed this big old bearish rising wedge, and then boom, this is what happens. That's a pretty explosive move out of there, right? So that's it. So if we do pull back, natural pullback point at this point on ES is that 39.58 target right there, first target. Ideally, I'd like to see that contained. Now, maybe we don't even pull back. Maybe we just keep going. But that's what I think. Maybe a little drift in the overnight session, some profit taking. Same thing on NQ as I showed you there. Some potential targets, pull back. And then RTY for you small cap traders. I did follow up in one of the posts this afternoon. I followed up with a chart of RTY. In fact, I showed you it was right here. This is a hourly chart. Let me just jump back to the 3-month chart. Same as ES, the S&P 500. You have a primary trend line off the lows back in mid-June right there, and it's a very well-defined trend line. So these were some of the most obvious, long setups, and that's why, despite that little whipsaw, which certainly got my attention, and it's indicative of bear market action. But again, the charts remain constructive, and as I continued to say, support is support until unless broken. You just really don't overthink it, to try to short the markets when you have both the S&P 500 and the Russell 2000 at a very significant uptrend line. Support it's counterproductive, especially when you're oversold. It just often that's not going to play out. If anything, you wait till a break, and you could still get that. If you're, I know I read the comments. There's some that are expecting this market to continue lower, and that's it. Just wait for these trend lines to get taken out. That's going to be very uber bearish if this breakout fails and we take out those trend lines with conviction. But as of now, it didn't. So the falling wedges are playing out. Crude oil is falling, natural gas is falling, and mark my words, whether it's tomorrow when Powell speaks, he is scheduled to speak. I got that out to you yesterday. It's on the economic calendar. You can find that under the resources tab on the site at the top menu, and then go in tools of the trade, and there's the economic calendar. And again, I don't expect him to pull a 180, not after how firm he was at Jackson Hole just a week or so ago. But sooner or later, he and the other Fed members will acknowledge that, especially if I'm right and we continue to see more downside natural gas and crude oil, they're going to sooner than later acknowledge that they're seeing an abatement in inflationary forces, and therefore can kind of ease off the pedal there. All right, RTY. So in addition to the trend line, you had the same thing. No coincidence. Big positive divergences building and impulsive breakout. And small caps were also up over 2% today. You zoom in and you can see we had a slight overshoot of that 1826.50 target there. And it's pretty good resistance. See all these reactions back here on that line. That's why that line's there. And so if we do get a pullback, great. Probably not going to go all the way back there, but if we do, that would be an objective add-on. You don't want to try to get the last penny out of it and wait for 1808. You want to step in a little early if that is your plan. But I suspect this has trapped a lot of shorts, a lot of bears, and we may not get that much of a pullback. And so if we continue on up, 1846, 30-ish, that's my next target there. Maybe a little bit higher. You could probably put that line up just a bit right there. About 1848, almost 1850. Then 1872, and then just like on NQ and ES and SPY and QQQ, you have these primary downtrend lines that I've been looking at and targeting for the last week or so, a couple weeks almost. All right, so those are potential near-term targets, and we're not going to go straight there. If we get there, we'll zig and zag along the way. Most likely, if we don't have a reaction here, we're going to be pretty darn near-term overbought when we get up to around that 1850 level in RTY. But also keep an eye on the big caps. They're the ones that are really moving the market, and the small caps are just going to follow suit. QQQ 60-minute chart. I'm all zoomed in here, but that's the same one I got out to you in the last post today before this video. 299.16, pretty big resistance level. That's a level I told you I expected, a brief overshoot or a reversal. And so far you can see there's where we close the day. This is the after hour, first 60-minute after hour candle. There's the close. Here, let me turn it off right now, my post-market trades. Close of the day was 296.94, so you can see just a hair below there. So we overshot it and we drifted a little bit below it. Again, nothing big, but that's forget about that long white tail. You always get these wonky candles in the after hour session. If you look at the 5-minute chart, let me turn off all these post-market trades. You can see there's that uptrend line comparable to what I showed you on NQ. That's probably where we'll come back to and see the buyer step in there. And if they take that out, you've got an even better support level there at about 296.40. So those are your two potential pullback levels on QQQ, looking at the very short-term 5-minute chart. All right, enough on that. You have targets. You have where I think things might be headed. You have here's a 60-minute chart of NQ. Again, you can turn off all the lines and just draw a trend line off the highs. And again, I'm just right now, that's my max bounce target. We could certainly see more. We may certainly not get there. I'm just saying it by the time we do, if the charts are convince me to do so, and I'm still have swing long positions, that's where I'll be exiting and or reversing for a pullback trade. Again, depending on how the charts look at the time. All right, so, and there's also some price resistance there. All right, let me just follow up and finish up with oil and natural gas like I said I would, and then get this video out to you guys without it being too long today. USO took out that major support. I don't really think there's anything to add to that. That's it. That's the sell signal, as good as it gets. You got your daily close as well. Yeah, a little concern there. You have some potential positive divergence. I use the word potential because it's what I call unconfirmed divergence, just another kind of term I've made up because I like to see the PPO make a bullish crossover, meaning turn up here, these lines make a cross to effectively put in a higher low. Right now, they're pointing lower. These are momentum indicators. So potential divergence may not be confirmed if crude continues to fall, like I suspect it will. This is one divergence that I'm going to ignore right now. That's call it bias, call it what you want. But if it firms up, now what would firm it up and what would be very bullish is to see crude snap back above here. Now a back test, that's fine. A back test all day long. That's you get a back test, that's going to be an objective short up to about 71 on USO. Anything much above 71 will be give you a bear trap, false breakdown, whipsaw, and it has the potential to confirm these divergences. If that's the case, I'm going to muck my hand, and that means throw away, cover my crude shorts. And on the crude futures, CL, this is something to note. I'm just showing you. This is meant to go to an hourly chart, but this is a frame. I'll come down to a 10-minute chart. I'm a little skeptical of these 10-minute and 5-minute divergences when we have such a powerful sell signal. So, but I will point out there that you do have some divergence. Quite likely it'll get burned through. That's what tends to happen. There was the breakout, by the way. You can see right here we'd been flirting with. That's the key support level, and then the breakout, the selling's been impulsive. And again, that's a short-term chart. Focus on this one here. We go out 1 year, daily candles. This is the one I got out to you this morning. This paints the big picture, and that's it. Just a beautiful shelf of support with a solid breakdown, and that's it. So nothing else to add. I don't have... there'll be little squiggles along the way, but I'm not even giving you any intermediate targets. I think this is a good swing to, short it and throw away the key with a stop somewhat above in case there's a fake out or something else happens, and that'll be a nice swing trade for you if you get that for both of us. All right, and then finally you had natural gas as well, UNG. That one already started. That one's been short for a while here. We had this is really DH4. I've been keep talking about it. I'm just going to put it up here. Where's that duplicate there? Where did it go? Oh, there it is. So we'll make that DH4. Like I said, it's just a series of consecutive divergent highs. We had divergent high 1 right there, followed by correction 1. That divergence continued, correction 2, divergent 3, big drop, and even bigger. All the same divergence because it started at this point. And since then, the PPO and the RSI have been making lower highs. And so by that logic, that what I tell you yesterday, I think that was a 46% drop off the highs. Forget about that number, that was from earlier. We could easily see that again, so if that's the case, we're only about halfway there. That would be down to that 1950-ish area, or even that previous low, about 45-50% drop. I can't promise you it's going to get there, but so far so good, and the selling is starting to accelerate too. That's what happens once it becomes clear to the masses that they are on the wrong side of the trade, meaning the bulls, the longs. They start to exit, and this is what a crowded rush for the exit looks like. This is what it looked like there. This is what it looked like there, and this is what it looked like right there. So as of now, looking good, and that's UNG. And you can of course trade the futures, NG, and remember, there's many futures for just about everything out there. I think it's QG, if I'm not mistaken, for natural gas. It's the smaller contract, trades at the same exact price level that NG does. So you can use my NG charts and cover there. It just has a smaller leverage factor. For crude oil, by the way, it's QM is the the micro, I think. There's a micro and a mini. QM is smaller than CL as far as the leverage factor, and then MCL is even smaller. I think MCL is the micro, and yeah, that's right. MCL are the micro crude futures, and QM are the mini crude futures, and CL is the big contract. But here's NG, and again, not much to add. Looking good. It's playing out. Run down. Next target 7.516. Then about 702, and I'm certainly open to the possibility of an even bigger drop to test those lows down there. Let me just put that line up for you right now, give you an idea if things get ugly in natural gas. And if so, like I said, whether you're in these or not, keep an eye on them, because the more of this and the more of that in crude, the more of this you're probably going to see in stocks as the Fed kind of cows down from their hawkish stance. And that should be a net boom for equities, barring anything big. Maybe the farther the market goes down, the longer it stays down, the lot more the likelihood for a major hedge fund to blow up or something like that, which causes a domino effect in the market. So there are no guarantees, what I'm trying to tell you. It is possible to see nat gas, crude go down, and then to see the equity market fall as well. But it's unlikely. Remember, I trade in probabilities, not possibilities, because anything's possible. I try to look at how probable something is, put the odds in my favor, and that's all you can do. You can mitigate risk in the financial markets. You cannot eliminate it. All right, we're right at the 20-minute mark. I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.